Good morning, folks. Welcome. Just about to get started here. Been quite a week so far with geopolitical tensions escalating between Israel and Iran, and then also seeing some of those tensions increase between Russia and Ukraine as well. Certainly a backdrop of volatility, and it adds to the kind of headline risk that we're dealing with here. So it's something to take into consideration as we kick off this Taco Tuesday, as it were. And we're just about to get started here. And we just had retail sales numbers drop a little earlier. Came in a little worse than expected, down 0.9% versus a forecast of down 0.6%. So let's kick off this episode of Back to the Futures with me, Markets and Mayhem. It's Tuesday, June 17th, 2025. And we have a lot to cover. It's certainly an interesting environment. It's one that's adding more potential headline risk. Not only do we have the trade risk with the potential for some of these deals to become a little bit unglued, if you can even call them deals, particularly some of the more important ones that are supposed to be coming down the pipeline, for example, with China. And on the other side, we have a backdrop of increasing geopolitical risk, one with the conflict between Israel and Iran. I think we could call it a war at this point. And then also with Russia and Ukraine, which has sort of faded into the background, but it's still worth keeping an eye on. And we do see really a lot
Large
of
trade in
oil
IWM at
infrastructure
DX feed by sell at price
being damaged,
209.12 with
both
2040.0 lots.
mostly in Iran, oil and gas infrastructure, but some in Israel, some of the gas infrastructure there damaged, and some in Ukraine as well, including the station that was helping to fuel some of the Ukrainian army out in Donbass. So At the end of the day, we do have some potential catalysts for oil here, but we also have some vol catalysts that we have to watch for equity markets. And of course, we have FedNest Day coming up tomorrow. So that's also going to be quite interesting to keep an eye on because this is going to be their big SEP report. And this is where they really talk about what their outlook is for rates, for employment, for the economy. It'll set the tone. And I don't think they're going to be talking about cutting anytime too soon. They'll probably walk back those expectations and set the tone for September to be the live meeting. So as we kick this off, I'd like to encourage you all to check out the Bookmap Discord. They've got a lot of cool stuff going on there, including live streams like mine that talk more about how to use this software for order flow analysis, as well as support and a welcoming community. And there is a competition going on right now. You can win cash and access to Bookmap by sending in your desk photo. Tweet it out with the hashtag bookmapdesk. Learn more at bookmap.com/en/bookmap-desk. This contest is ending in just under 2 weeks, and you can win up to $1,000 and access to Bookmap if you win this competition. Of course, one of your screens, assuming you have more than one, should have Bookmap running on it. A bit more about me. So, believe it or not, I've been trading markets for 20 years. I'm one of those rare people that continues to find this a whole lot of fun after 2 decades. And I say that because a lot of people don't make it. About 95% of people that start trading don't make it even a year. Why does that matter? Because a lot of the times the folks that don't make it are making the same mistakes. Too big of a position is one. You get too big into something, it goes against you, you get wiped out, or at least you lose your confidence. My thought is no single position should wipe down total portfolio liquidity by more than 1%. If you can keep that type of sizing, sure, the gains may not be quite as sexy, but the losses are so much more manageable that you'll always have the capital to keep trading. Another thing I see folks struggle with is always wanting to have skin in the game. There is no reason to feel that way. The market will always be there, and our goal as traders is very simple. We're running businesses, we're buying and selling inventory, we're hoping to capture the spread. That's really what we're doing. We're hoping to capture a positive spread repeatedly as traders. And that's one of the most important parts of trading, is finding the consistency to capture that positive spread. It's not going to be 100% of the time. No one's going to have winning trades 100% of the time over any reasonable length of time. So you're going to have to cut those losers quickly, ride those winners as long as you can. And remember, it's not about capturing tops or bottoms. It's about capturing the bulk of the move. This is one of the most important parts about trading that I think we need to embrace. Because a lot of the times people get mixed up and they put their ego into this, they put their emotions into this, they define themselves from this, sort of hit or miss ability of being able to predict moves
Large
before they
trade in
happen.
IWM at
But
DX feed by buy at price 208.93 with
that's not really what it's about. And sorry, you got a little bit of trading going out there in the Russell 2000. But this is the most important part, is really understanding your mindset. What are your goals? Because if your goal is to buy a Lambo next week based on options that you're buying in popular stocks, that's not realistic. You're likely to get hurt, and you're also not giving yourself the opportunity to embrace the process. Understand that it's always about managing risk first and foremost. And then the gains can follow if your process is good. And if it's not, you iterate, you improve. Patience is so important here. I see folks getting into trading and thinking, boy, you know what? I'm going to be rich so soon. I'm going to quit my job. I don't have to worry about any of the normal stuff. I would really try to take those expectations back to reality. Yes, you can make money trading. Yes, you can build wealth trading. but don't keep sizing up those bets. Another mistake I see traders make is continuing to keep all their capital in one account. If you're making money trading, take those profits and roll them into long-term investments, whether it's stocks, whether it's fixed income, real estate, buying businesses. Diversify. It shouldn't all be in one place. You shouldn't have all your eggs in one basket, so to speak. One of the keys to my success as a trader and as an investor is doing exactly that. When I have really good trades and my account soars, I'm taking that capital and I'm rolling it into investments. And I've been doing that for about 19 years now. And it served me quite well. And I would recommend other folks to consider the same. Another thing to think about, and then we're going to move on to talking a little bit more about order flow. But I like to talk about some of these areas, these pitfalls that people get into, because I feel like there's a lot of folks out there listening right now or watching right now that are struggling with some of these things. And I'd like to do whatever I can to pay forward the mentorship and the help I got early on to help you all as well, so that you have a better chance in succeeding in an occupation that, again, there's a 95% failure rate. And it's not because people can't trade. It's because they don't want to put the work in. It's because they think it's easier than it really is. But trading will challenge you in ways that you may not expect. This is one reason why I think taking a more systematic approach is important. Discretionary approaches lean on gut feel, but emotions rarely give us the opportunity to make clear decisions. Typically, when we're the most fearful or the most greedy, we're about to make the opposite decision that we should. So taking a systematic approach that's more driven by data, like momentum, like flow, that's helped me to stay on the right side of the trades rather than leaning into emotion or what I think the market should do. We can all have opinions. It's fine to have those opinions. It's fine to share those opinions. But how we trade and how we invest should not be solely driven by our gut feel or our opinion or our emotion. I began working with Bookmap in early 2022 because I really enjoy the way this software works. I love how it visualizes liquidity. And I also like how I can easily add other data on top of it and other indicators on top of it, which I have on both accounts. I also founded Traderade in 2022 and Macrovisor in 2023 to share my experience, ideas on market opportunities, and education. I also build a number of unique tools and models and provide one-on-one coaching. One of those unique tools you'll see today is the SPX Options Visualizer. We also have that capability now for NASDAQ, both the ETF and the futures, as well as the SPY ETF and IWM. So lots of cool stuff. And the visualizer coming to all single stocks soon as well. We have the capabilities. I'm just building out the API infrastructure. So why do I watch order flow? Well, first, you have to understand, you can look at order flow and get the wrong idea. It's not a science with just like very, very clear principles as to what is what. So that is why I've built tools to systematize the way that I analyze order flow. For example, that's what my exhaustion indicator that's available to Traderade members does. That's what the aggressive absorption indicator does. That's what the SPX options visualizer, for example, does. It gives us tools to give us a better sense as to what the probabilities are. Because that's really our goal as traders, is to infer probabilities and act when there's a sufficiently high reward to risk ratio. Another area that you can watch are deltas. Deltas are quite simply the difference between one thing and another. In this case, it's the difference between buyers and sellers, whether it's visualized in the heat map bubbles or the session volume profile. You can see that in real time. The bubbles are showing you deltas at a specific moment in time, whereas the session volume profile is showing you deltas by price, or what's happened with buyers versus sellers at particular prices during the course of the session. Both of these views are useful, and we'll talk about them as we fire up Bookmap and look at that heat map. Another area that I find very interesting and helpful is looking for large passive order flow or icebergs. There are ways that folks try to infer this, looking at volume profile or otherwise, and assuming a really large amount of volume at a particular price might be an iceberg, but there's no better way to be certain of what you're seeing than seeing it as it hits the wires or as it hits the tape. Now, what is an iceberg order, you might ask? Quite simply, an iceberg is an order where you're not showing your full size. So if I need to move 1,000 contracts of S&P and I don't want to show that full size, I might iceberg it out to 200 at a time. So I have 5 runs. So when that first 200 lot gets filled, it resets, another 200 lot gets shown, and I'm kind of kicked to the back of the queue. The advantage of this is that I'm more likely to get a fill without moving price. And if I'm patient, that fill can kind of come to me over time. It means that I'm not going to scare the order book away from my offer or bid as well. When you put something too large on the book, often you see price run away from it. So icebergs can be helpful if you see them at sufficient size. I'm talking thousands of lots at a time on ES. They can give you a sense that some of those bigger institutional players are starting to take positions, and it's often very useful, for example, when it goes the other way of a big stop run. So let's say you have a big move down and there's an enormous stop run, hundreds and hundreds of stops getting triggered on ES, and then you see thousands of icebergs coming in on the buy side. So buyers are getting stopped out, their sell stops are getting triggered as price goes below their risk threshold, but bigger desks are coming in and scooping that up by the thousands. That's usually a sign that's worth watching closely because you may get a reversal not too long after that. It's certainly going to discourage the sellers when you see size that big coming into play. So in the world of options, S&P 6000 remains an enormous magnet level. I think we can all appreciate that given that we're in triple witching options expiration week. We also have futures contracts expiring. I've rolled over to the September contract because now liquidity is favoring that contract. Yesterday it was pretty much an even draw between June and September. And on that note, it's important to remember for services out there, sometimes they don't show you accurate numbers. I saw a lot of folks on Sunday night saying, why are futures soaring as, tensions are escalating in the Middle East? And futures weren't soaring, but they were looking at services that were showing the September contract and they were giving the gain as if it was the June contract close on Friday and the September contract open on Sunday night, and the difference was the gain. So it's factoring for like 60 points of delta. And obviously that's not how that works, but some services continue to show it as if it's a gain, not factoring for that delta. So just be mindful of that. When contracts roll, some of these charting services are going to show you errant data. And we didn't have a big rally on Sunday night. It was, it was a little bit more kind of flattish. It certainly wasn't the kind of reaction that people might have expected with all the crazy headlines over the weekend. But one of the things that I was saying is that with these types of conflicts, the market tends to zoom out more and more as time goes on. So if you don't have this big escalation where things are getting much worse and the economic impact is spreading, then usually the market starts to look elsewhere to key up for price discovery. It doesn't mean the headline risk isn't there. It's still there. It's just diminishing. And unless and until this war gets worse, it will likely continue to diminish. And this is a story as old as markets. You can see it going back with other geopolitical escalations, including Russia-Ukraine. Eventually, the market looks elsewhere. That's not to diminish the severity of these things or the human toll. These are tragic events. Anyone, especially civilians, being hurt or dying is incredibly unfortunate, and I truly wish that it wasn't happening. But we are trading these markets, and the only thing we can do as traders is assess our probabilities and try to put them on our side for the trades that we're going to execute. So watch 6,000 this week. I think that's a really, really, really big level. Because in my view, we're likely to be kind of stuck around here until probably after options expiration, unless we have a really big catalyst. So 6,000 is likely to be a magnet pulling price back towards it. Something to keep an eye on as we're trading today. So let's talk about some of these levels in the SPX options that are worth watching. We talked about 6,000. That's going to be our vol trigger. If we push below that sufficiently and build acceptance, it's likely the market becomes much choppier because of how much gamma exposure there is on both puts and calls at that level. We've got the gamma flip at 59.80. That's another area that's worth watching. If we do push below that, the deeper we go, the more we get into a chase environment. A chase environment is one where dealers are going to be selling dips and buying rips, and that exacerbates volatility. We also have Gamma 2 at 5950 and Gamma 1 at 5900. So what this really is, there's a lot of gamma exposure between 5900 and 6000 that can get us a bit stuck here. So I would be looking for that. If we are able to break above, we've got plenty of resistance. 6030, 6100, and 6200 are key levels to watch in SPX. And then on the support side, 5800 is a formidable wall of puts that is likely to give us some decent support. So we're the market is implying a bit of a range between 5100 and 6100 right now. 5800 being the low end, 6100 being the high end between the put wall and the call wall on the SPX. Switching over to NDX. Call wall at 22,000, put wall at 19,500. That's sort of the implied range the market is giving us here. And we have seen some resistance at those higher levels. Vol trigger at 21,900. Pushing below that probably has us pulled into Gamma 2 like the magnet that it is. And Gamma flip on NDX, 21,239. So these are all going to be levels that are worth watching as well. Feel free to take a screenshot, share them if you'd like. But this is something that I'll be watching as we're trading throughout the week because we've seen increasingly that options have a bigger and bigger influence on these markets over the last 3-4 years. It's impossible to ignore the levels and the flow because if we do, we're missing out on huge amounts of information. And the weekly pivots. The S&P 500, we're going to be looking at these from the lens of really decision levels. 6,000 for ES, 21,563 for NASDAQ, Bitcoin 106,185, gold 3,369.70, silver $35.59 an ounce, copper $4.73, and crude 72.33. These are levels that I'm bullish above and bearish below for these particular futures contracts. And finally, exclusive deals that are available. You can get up to 40% off of Bookmap. That's 40% by visiting Traderade.com/bookmap, scrolling down to the special offers, and choosing a plan where your first billing period will give you that juicy discount. So with all of that being said, we're going to now fire up Bookmap and take a look at what's going on. And as we're doing that, I'm also just going to take a look at any questions folks might have out there. So just give me a moment while I check into that. And good morning, everyone out there in the chat. I see a bunch of y'all saying good morning. All right, so I have a question. How are retail numbers this morning going to impact the S&P 500 and the market? So retail sales, I would say, is a medium level catalyst. I don't think that it really grabs the market's attention unless there's a much bigger deviation. So negative 0.9% versus negative 0.6%. It's not the best thing, certainly, to see, but I don't think that it's going to have an enormous negative impact on price discovery. I think the market right now is much more focused on trying to assess what the Fed is going to do tomorrow. And then also, I have to emphasize this quite a bit on options expiration week alone. But then when you have, triple witching, it becomes even more important. You have an enormous amount of capital rolling between the June and September contracts, updating their options positioning, pushing them out to further expirations. You have VIX expiration tomorrow as well, so you have a lot of vol exposure, repositioning. hedging changing as well, people taking a look at the market and kind of trying to figure out where they want to position into this next quarter. Add to that, you've got pensions rebalancing that started yesterday. You've got some degree of retail selling, and we're in the buyback blackout period. So, with all that being said, you've got so many flows that are somewhat agnostic to the price action that we may not see levels and flows play out this week the way we may ordinarily expect them to. Yesterday was a decent example of that. You had really strong call buying in SPX, but price was largely going the opposite way after we peaked out. And I kind of talked about that on the Traderade Discord and on social, where we got to key 1 plus, and then we couldn't push above that level. And I had a sell signal fire off around the same time. I shared that with you all in the interest of trying to get folks out of the way of some of that risk, and for the more agile traders being able to fade that move. And that was going against the flow, but it was what we were seeing with some of these key levels and also some of our indicators, that there was just selling underneath the surface. And that could be some of these pension funds. It could be them lightening up, rotating from stocks to bonds, as they tend to do around these rebalancing periods. But also you've got that cessation of buybacks from about 200 out of the 500 S&P 500 companies. And then finally, you have all these contracts rolling. So what we may expect price to do based on a particular catalyst may be a lot different than what it actually does because of all of these positioning changes that are happening. So if ever there was a time to be humble about our ability to read a chart and imply as to what may happen next, this is a great time. This triple witching week, options expiration week in general, is a great time to be much, much more humble about our expectations. Some folks take the week off. Other folks are just much more conservative about what trades they take on. Add to it, by the way, we also have Thursday off because of Juneteenth, which makes this a week where vol decay accelerates a little more quickly going into expiration. So all that being said, I think it's a good time to be very nimble and kind of sit on your hands unless a really ideal setup comes up that favors your way of trading. But back to the original question, I don't think that a, small miss on retail sales is going to be what really moves these markets. So on screen, we've got Bookmap. We're looking at the S&P 500 September contract. We can see liquidity is starting to migrate to this contract. Right now, you've got about 17,000 order book depth. If you add that up with the June contract, it's about 30,000 between the two. It's not great liquidity, but it's not terrible. It's certainly not the low levels that we had seen, but it's also not back to the 50, 60,000 order book depth that I feel a little more confident about, because it takes a lot more effort to move price when you have a more liquid environment. So it reduces risk to us if we're trying to trade that kind of environment. On the other side of it, when you have a less liquid book, it takes less effort to move price. So headline risk is going to be higher because the impact that it can have. Say, for example, you get a headline out that Trump says, we're not making progress with China. We're going to crank up the tariffs, and the markets react more poorly to that because when volume hits, there's not as much liquidity on the books to absorb it. So that's one of the reasons I like to watch this outside liquidity indicator very closely. Now you can see these bubbles on the heat map. These are delta bubbles. These are showing you the difference between buyers and sellers. So larger red bubbles, those are more aggressive sells. Larger green bubbles are more aggressive buys. I've also got the delta volume candles that will show you similar on the bottom. Then, as we were talking about in the presentation part of the session, we've got the session range volume profile. And this is showing you deltas by price throughout the time period of the entire session. So you can see when one side might get a little too aggressive, like there's this big buy delta over here by 60.90. Buyers got pretty darn aggressive up there. More of them got off sides. And as you can see throughout the session, that did help to create a little bit more motivated selling pressure. You saw some pretty aggressive absorption by sellers of buyers, by sellers of buyers up here. And ever since those aggression prints printed um, earlier this session, this really started. This was really last night into the close. We started to see that drop off accelerate. And so going into today's tape, we do have some updates that are going to print on the visualizer as soon as it starts triggering up. But I think that we're going to have a session where we're kind of stuck in this key gamma level around 6,000. I'd be pretty surprised if we move too much higher or lower than it. If we're able to break away from that level on a closing basis, that definitely gives us some potential for continuation in whichever direction we go. Let's take a look at Bitcoin here as well. Bitcoin was looking pretty good yesterday, and then when the negative headlines started to hit the tape, it really started to fall out of bed. I think it was trading 109,000 again. It was getting close to looking like it wanted to break out. And then those negative geopolitical headlines hit, and we saw, price really come off. Now trading around 105,000 on Bitcoin here. And it does give you a sense that it's not really behaving as a safe haven. It's more a relief valve for excess speculative liquidity. And I'm not saying that to piss off anyone in crypto. Quite the opposite. It's much better to understand what you're trading and how it reacts than to just get mad at it when it doesn't do what you expect it to do. Like I know folks have said, oh, it's digital gold. It's the same thing as gold, just ones and zeros, scarcity, all that. It's not really the same. Gold is still being treated as a safe haven here. Gold is still benefiting from uncertainty in ways that Bitcoin is not. So they are divergent. I think gold is the place that people go when they want to hedge against uncertainty. And Bitcoin is the place that people go when they feel like there's just plenty of capital out there to speculate with. And that's fine. They both have separate and distinct purposes for diversifying. Bitcoin's kind of like a beta magnifier. Gold is a place that you go and hide when you think things are getting worse in the world around you. Again, both have their purpose, and that's totally fine. Speaking of gold, gold now trading just around 3,411. And just really interesting to note with gold here, we are above our pivot. We've seen sellers drag down this point of control to about 34.04. And just give me 1 second here. I just want to take a look at something. I see a lot of action coming into IWM. I got all these price alerts, so figured we'd pop over to that chart and have a quick look. And indeed, it is moving quite aggressively this morning with the S&P 500. There's a big bid coming in as the market opens here into these small caps. So I think that is worth watching. IWM is a very hated part of the market. So sometimes it has these ridiculous rallies when you see short covering start to pick up from hedge funds. And I do think that's part of what's going on here. I don't know that that's the whole story, but I do think it's part of it. Let's move back to the S&P 500 futures. I'm going to throw the filter on it just to get rid of some of that market maker liquidity that's bracketing price. And I'm just going to change the view here from these candlesticks back to volume dots. There we go. And I'm going to pull up my news, so pardon the interruption on the screen there for a moment. And I'm also going to pull up Benzinga Pro, where I might be able to find some interesting flows to watch as the session takes off here. And right out of the gate, we do have some pretty interesting flows coming through. Semiconductors getting some serious love here. An aggressive call sweep for Soxel SOXL, the leveraged semiconductor ETF, targeting a 25 strike. And seeing some big sweeps coming into AMD, Coinbase, Nvidia, GameStop, of course, can't have a market rally without GameStop participating. NewScale Power, TQQQ, just pretty aggressive sweeps across the board here that imply the market wants to try to move higher. And we do see a pretty big offer coming on screen here at 6070, about 551 contracts, now 581 on S&P. Because it's so close to price, it's often going to act a bit magnetic, kind of pulling price into it. But this is also a good test of demand by buyers. If they shy away from this challenge, it gives you a sense they don't have the demand to keep pushing this thing higher. So it's a good way to kind of gauge demand when you see those large offers overhead. How does price react to it? And so far, buyers are kind of shying away from that offer. We also have a pivot overhead that's worth watching here. Let me see if I can pull that up on screen for you all. Here we go. So these are levels that are programmatically generated by one of my algos. And right now we're looking at a pivot at 6068.75 on the ES contract. And you can see that's been resistance in the pre-market session. We actually got a sell signal from that played out. Now buyers are giving it another challenge, breaking above the big green line. That's EMA 21 on a 5-minute period chart. And they're giving it another go, another rejection, but it looks like buyers really want to try to challenge that level. So for me, I like to see a pivot break with acceptance built with at least one 5-minute candle holding above. We didn't get that here. We just got that wick. And in fact, this whole series of wicks up here also didn't show us really building any acceptance above that pivot. So we're watching to see if this move is the real move here. And again, you've got that offer right nearby, posing an additional challenge to buyers. Some pretty big flows coming into Microsoft stock here. Let's see if we can pull that up. See what's going on over there in Mr. Softy. And those flows in Microsoft targeting the 480 and 550 strikes. Pretty aggressive. Some of those flows for the 550s are targeting out next year, but the 480 strike flows still coming through there as well. And let's just take a look. I bet we've got a decent amount of liquidity at 480. Yeah, 39,000 shares on offer at 480 on Microsoft. And got some flows hitting for First Solar, targeting 150 strike as well. Let's see if anything is going on over there at First Solar. I like to watch these flows. Sometimes you find decent opportunities in the tape. So First Solar had a bit of a bid off the open, now sort of consolidating. We'll watch those flows to see if they continue there, but they've already paid about 350,000 for First Solar, 150 strikes for July 18th. So that's FSLR 150 strikes for July 18th there. Seeing a lot of flows coming through. Then, of course, there's Tesla. Tesla also seeing a decent amount of flow coming through. Let's take a look at that wild stock. Tesla flows targeting the 330 strike for June 20th. This has been a series of flows we've seen in the stock, really. 330 and 350 have been common strikes to be targeted. Also got some flows coming into SLV, or the silver ETF, targeting the 35 strike. Let's check on Bitcoin real quick here. Coming off the lows, starting to look a little bit like a rounded bottom here, and buyers impressively ignoring that seller aggressive absorption and just pushing higher. So it does look like there's some real excitement in Bitcoin here. I think this is going to be one to watch. We might be seeing the beginning of a reversal breakout playing out with price bottoming here, the sort of rounded bottom, and then I'd call it a breakout if we're able to get above 105,840. Seeing some pretty aggressive flows coming into Western Digital as well. This is a hard drive and solid state drive maker, saying that the AI race is really keeping them pretty busy, more demand than they're able to manufacture for, essentially. Seagate and Western Digital saying similar about that. We are seeing this pop off the open, and the Western Digital flow that we're seeing is 450,000 in premium, sweeping into 60 calls for September 19th. So some of that excitement certainly helping to bid up the stock here. And we're seeing some SPY call sweeps coming in, targeting 601, just a little bit outside of price, but certainly part of a continuation here. And wouldn't you know it, we are back to a pretty important level on ES. We're challenging that pivot at 60, 68.75. Once again, it's moving down just a bit to account for the fact of how much volume has transacted there, showing that we are really making a push above that pivot. That's healthy. That's what you want to see if you're constructive on price action here. And it also suggests to us that we've taken out that offer overhead. So you can see aggressive buying bubbles followed by more aggressive buying bubbles, getting into that offer and taking it out. Retreating just a little bit here, but I would expect that we should see a higher low here, unless that was all the ammo buyers had at 587 and now they're done. But overall, that is a constructive look for buyers to get aggressive, to take out that overhead offer, and to move above that pivot. So let's see if they're able to keep that momentum going. Right now, retracing that move, but you can see not much aggression by sellers here, both on the bottom volume delta bars and with the bubbles that show us price delta or volume delta, not showing us much in the way of aggression yet, but now making a new RTH low or regular trading hours low in ES September. Looking around, not really seeing much news. One headline that crossed. Musk's XAI is in talks to raise 4.3 billion in equity funding. So, that ostensibly is a good thing if you see companies still able to raise capital. It means there's still plenty of excess liquidity out there. Let's take a look at the Nasdaq here. Nasdaq also looking a bit rough. It had a much more muted move than the S&P. Its bigger move happened right off the open. Then you saw some aggressive selling coming in, and now that aggressive selling is actually continuing on the Nasdaq here. Also seeing some iceberg selling here. On the bottom chart, you can see that there's been this passive distribution since the open. About 403 net sells on the iceberg side. Let's take a look at gold. Gold is doing quite well. Gold pushing towards session highs here. And of course, with everything that's going on around the world, I expect gold to continue to be able to move higher. I would not be terribly surprised to see gold hit $4,000 an ounce this year. Simply because there's nothing that's happened that's reduced uncertainty. If anything, it's increased. Let's move back to ES here. Looks like we're consolidating after that drop. And again, not much aggression. It's almost like buyers got up to that offer, filled it, and then just said, you know what, we'll just kind of go on a break for a minute because they're not fighting the move lower. These are very, very low aggression sell deltas on the way down. So that does suggest that if buyers did wanted to step in here, they could still push price quite a bit higher. And we've got a new large offer overhead at 60.75. Tesla sweeps are continuing to come through, targeting the 340 and 350 strike here. Let's quickly revisit Tesla here. Tesla dropping to lows, so it's actually been getting sold off pretty decently here. Cutting through this 36,000 bid, sellers showing they still have supply, but now seeming like it's struggling to get through this 320 bid where there's 64,000 on bid just below price on Tesla. And those option sweeps continue to come through on both sides of the trade, but more so on the call side. But we are seeing some put sweeps on Tesla as well, targeting the 310s and 320 strikes. So it's sort of like a bit of a war in Tesla options between put buyers and call buyers. Overall, the call activity seems like it was more active this morning, but the put activity now in the last 10 minutes really picking up on Tesla, and especially focused at that 320 strike, secondarily that 310 strike on Tesla. And then if you want to hear something absolutely wild, someone bought Tesla 800 calls for June 17th, 2027, spending about 200,000 on that sweep. Let's move back to the S&P here. It does appear as though we are now starting to rebase. Remember, we talked about this move coming down, not really any aggression, giving buyers every chance to take back control of this tape if they wanted to show that they've got demand. We've got this big offer overhead at 60.75, and we're starting to see buyers come back in. Again, not much aggression by either side here. We're also seeing some of the flow print, and the most active flows are targeting higher prices in ES via the SPX options complex here. We can see that hot call and warm call now coming through. So that's about 858 contracts targeting 6120 on ES so far. And I'm just going to check around to see if folks have any questions here. And one question, would you agree is there is more probability of price rejecting that area of 6090 towards more downside in ES from DZT? DZT, I think that's an interesting question, but for the way that I look at this, I'm really watching this through the lens of flow and positioning. So if we're talking about 6090, we've got key 1 plus up here. This is an area of formidable resistance, to be sure. So I would definitely be watching to see how price reacts up here. It doesn't mean that we're necessarily just going to reflect lower, but the way I look at this, it's much more important as to how we react at these key levels and also what flows are pointing to. Add to it, we are in triple witching week. So what we look at in terms of options positioning, volume profile, other types of levels that we may key off of, this is not likely to work as well during triple witching week. Add to it, you've got pension rebalancing, buyback blackouts. There's just so many different forces that are more price agnostic here. Both the cessation of some of those liquidity flows and the rotation of some of those liquidity flows. And I think it's going to be a little trickier to map out exactly what we expect. What I think that one should do in a week like this is be much more careful about what setups one is willing to trade. If I was trying to fade that 60-90, I'd be looking for an aggressive move that gets a bit exhaustive going up to that price and then a big wick rejection lower to try to fade that. So it's really, for me, it's going to be about the reaction function up there. Ships says, teacher, every Tuesday when you have your class and I hear you speaking, it's always such great information. Thank you so much for all your insight. That's very kind of you to say. Thank you. Sing, could you give me a little more color on what you're saying? I see what you posted, but I'm just trying to make sure I can give you a response that's helpful. And so far, really, this has been a pretty narrow range this morning. We've got your 20-minute opening range, and it's basically, 11 handles. It's not much. So if one subscribes to opening range theory, you're really not seeing the potential for a very dynamic trading range today. And give me 1 second. I just need to disable. There we go. It was talking to me way too much. Ruda asks, hello, you watching only Bookmap when you trade? No, watching a little bit more than that. So I've got 1, 2, 3, 4, 5, 6, 7, 8, about 8 screens in front of me at any given time. And with that, I'm watching Bookmap. I've got that for my zooming in, intraday charting. I'm also using Motive Wave. You may have seen me pop this chart out a little earlier. This is my Motive Wave chart with my indicators on it. We can see we're pushing above that pivot now with some real gusto here. So seeing buyers, and these are delta volume bars on the bottom as well, seeing buyers really try to make a push, starting to see a mild sell signal form here. So we'll see where that takes us. But I watch Motive Wave with my indicators. I've got Bookmap. I'm also using TrendSpider. And so those are the three charting platforms I use. I use Bookmap for the most zoomed in view, Motive Wave zooming out just a little more, and then TrendSpider for the big picture. And then I also like to watch news via Financial Juice and options flow via Benzinga Pro with my customized interface on there. So, a couple of different things going on. I don't try to have too much going on at any given time, which is one reason why I have price alerts and flow alerts and other sorts of alerts that give me a verbal notification. So I'm not always having to expend mental capital and time just watching the charts obsessively. And I would encourage other folks to consider doing the same. Your time and your energy are valuable. Use them wisely. So yeah, I use at least 3 different charts when I'm trading: Bookmap, Motive Wave, and TrendSpider. Let me know if that's helpful to you. And just a little more color on that process. So Bookmap is where I'm really watching the nitty-gritty of the order flow. It's giving you really second by second price action. Motive Wave is where I zoom out a little bit more to watch some of the levels, see some of the price action that's happened over, like, really going back to like 3 a.m. last night to give you an idea of how big of that window I'm watching, right? So that's like a 6-7 hour window that I have on Motive Wave, whereas Bookmap, I'm only watching about 30 minutes. So you can see that's the next level of zooming out. And then TrendSpider, I'm using that for my daily and weekly charts to identify some of the areas where I might have interesting price action, to where I can put on some of my other custom indicators. And that's more for swing trades, but also at least once a week for the levels I'm going to identify for, stocks, for futures, for crypto in day trades. I'll be zooming out to those daily and weekly charts and occasionally monthly charts to find areas of interest. So hopefully that helps. But I think for most people, it's not about having a one size fits all solution. It's about using what tools are available to us that augment our own trading process. And I would say we're all wired very differently. So what works for me may not be the best solution for you, but then for someone else, it may be exactly what they need. So seeing one of the Bookmap mods is trying to help you with that. Using that slider can help if you're, if you're trying to color the heat map. But other things you can do, you can go into your settings using this button, studies configuration. You can go into heat map, and you can adjust everything for your heat map right here. Your lower cutoff, your upper cutoff, if you want to size them exactly, you can do all of that, and you can change the gradient of the heat map as well. So this is something that you may want to do. And then if you find a setting that works well for you and you want it on all of your Bookmap charts, you can apply that globally. So hopefully that helps. But that's under your settings, study configuration, and then heat map. Seeing a bit of an exhaustive move here in the NASDAQ, those green circles illustrating the same. This is a bit of buyer exhaustion at an area of implied resistance, and also where we're starting to see a sell signal fire off in ES here. So let me just pull this back up. You can see that sell signal starting to form here. You can see that we're challenging an area of resistance. So this is going to be a pretty important area to watch. We can still get it more extended. There's no reason we can't see this thing get up to 60.79. But I think in the very near term, this move is going to probably need to once again consolidate and retrace pretty soon. And if we pull up the NASDAQ chart for the same, you'll see a similar look here. We're challenging this pivot overhead. We're not necessarily able to break above it, and we have a call wall just overhead as well. So we're getting close to some pretty key resistance areas in the S&P and in the NASDAQ here. Also see, for the NASDAQ, a decent sized offer overhead at 22,100, about 66 contracts there. Seems to be enough to discourage buyers for now. Let's pull it back to the S&P here. Also seeing some absorption, aggressive absorption, sellers absorbing some of those buyers on that last push. So just some signs here that things might be getting just a little bit extended very near term. And folks, I do want to thank you for tuning in to this week's episode of Back to the Futures with me, Markets and Mayhem. I'll be back next week, 9 a.m. Eastern. Definitely check out what we're doing at Traderade. Visit our website at traderade.com. We've got a lot of cool stuff going on between our community, our actionable ideas and analysis, and our cutting edge trading tools. And if you like Bookmap, you can get up to 40% off of Bookmap. Visit traderade.com/bookmap. That's traderade.com/bookmap and scroll down to the special offers. And I will be back tomorrow to cover what I call FedNest Day. The Fed decision, I don't expect them to cut. I expect Powell to give us a bunch of reasons why September is the hot meeting. And obviously, I don't expect a cut in July. August is off the table. That's Jackson Hole. So September, when the next SEP report comes out, that's when I expect we may have some likelihood of that first Fed cut coming through, if we're to get one at all. So thank you all for tuning in. Really appreciate each and every one of you. Always fun doing this every week. Come back tomorrow. I'll be covering FedNest Day. I'll post the links out there on my feed as we get closer to the event. And I wish you all a very good trading week ahead.